Are you worried at all about the health of the stock market because of all the retail trading going on? We have so many people entering the stock market. Maybe they know what they're doing, maybe they don't. But a lot of people are trading with leverage. And a lot of people are coming into the market with very high expectations, hoping to double their money in a very short amount of time. Is the stock market going to crash because of that?
Well, the market's always correct, and sometimes as much as 40%. I don't see that anytime soon because we have a very, very buoyant economy and we're about to get, $1.9 trillion stimulus package and now a rumor of a $3 trillion infrastructure package. That's a tremendous amount of stimulus. So, asset classes like stocks are likely to do well during that period. But there are times when markets do not do well and you have to live through that. It doesn't bother me that, people are actively day trading. I have no problem with that. I think that, it's just bringing more people into the educational side of investing. And I'm not sure, that we're going to have a crash anytime soon. Nobody knows with certainty. But my point is, these are environments that are very good and very productive for stocks. And so my anticipation is they will tend to trend higher.
A lot of people are now jumping into cryptocurrency. Do you think that cryptocurrency, Bitcoin, is the future? Is that a way for someone to now build wealth quickly?
Well, it is, but it's highly valued now. I have a 3% allocation in Bitcoin in my own portfolio. I have 5% weighting in gold, so I look at it as a property, and it's performed very, very well. But the point is, Bitcoin is it's a very, very early nascent asset class. A lot of issues with it. The one that's cropping up its head right now that people should be concerned about is institutional clients do not want to own Bitcoin mined using coal to burn for electricity. And that kind of defines much of how Bitcoin is mined, particularly in countries like China, where they're not compliant on human rights issues, they're not compliant around tariffs, they've got all kinds of issues there. And so there may be a premium coming into this market where original virgin coin that's not mined using coal, that's mined sustainably with hydroelectric or some other form of sustainable energy, are going to be worth more than the blood coin mined in China, which is where the majority of coin to date have come from. Remember, in venture investing, it's not return on capital that matters. What matters is return of capital. You haven't made a dime until you get your principal back in a venture investment. And that's very hard to do. So if I use a royalty, great. People say to me, oh, royalty, why don't you just do equity? Because a royalty is even better than equity. When the company gets sold, the acquirer, if I have a perpetual royalty on board, comes to me last and says, how do we buy out this royalty, or how do we incentivize you to work for us going forward and continue the royalty? Both outcomes I really like. But I'm staying in the game, cash is flowing. As I always like to say, what matters in business is cash flow. If you don't have any cash flow, it's no go. You're not going to make any money. I have no idea what's going to come through the door in the next 20 minutes. No idea. I don't get to see these deals first, but they're so incredible. Each year they get better, more unique. We have everything now. We have technology. We've got, consumer goods and services. We have mechanical products. We've got so much diversity in the opportunities that if I miss one, I know in a couple hours I'm going to get another one. I have no regrets. I've got a fantastic team. I've had really incredible outcomes. I still have the largest exit in Shark Tank history, the sale of Plated to Albertson, which was my deal for $320 million. Wow. Nobody's exited anything with that much before or ever since we started Shark Tank. So I'm pretty happy, with the outcomes, and I've made plenty of mistakes. And so, they go to zero, and that's tragic too. I hate when that happens. But overall, I'm managing diversity in portfolio, which I think everybody should do. That's kind of the way it works. What people should do is take at least half of that and invest it in themselves. You put that into an index fund and just let it appreciate over time. I mean, this is a once in a lifetime gift from the government. Why would you just piss it away? Why wouldn't you take I'd take all of it and invest it. Just forget about that money and let it accrue over the next 20, 30 years until you retire. You'll be so thankful you did that. I mean, I don't think I think they put too much money in the economy, actually, because there's a lot of people who have full-time jobs that are getting these checks. Why we're doing that, I don't know. But if the decision's been made, is my point. You should take this opportunity and invest it in yourself. You're not giving it away to somebody else. You're investing in yourself. That's the whole point. But again, diversification. I invest in Canadian dollars, American dollars, Swiss francs, euros, British pounds, and Bitcoin. I mean, and I have gold as well. I want diversity. That's the whole idea, because I don't know what's going to happen next. Will the dollar be up? Will Bitcoin be up? Will the euro outperform? Will the Swiss franc, which it's done before, become the fiat currency of choice? You just don't know. And that's why there's a lot of room. I would argue one thing about Bitcoin, which I've spoken of many times now. When I made my declaration that I was going to 3% weighting, I got all these calls from institutions saying, "Do you know where your coin was mined?" And I said, "No. I've just bought Bitcoin." They said, "Well, we don't like coin mined in China or anywhere that's mined using coal to burn electricity, to make electricity. It's very pollutive." And so I think there's going to be distinction around sustainability around Bitcoin mining in the years ahead. So there'll be a premium for a clean coin, virgin coin, versus a blood coin from China. The three keys: number one, never more than 5%. Let's you build a portfolio with a minimum of 10 stocks in it. Never let any one of those stocks be more than, let me start from scratch on that one. Start with 25 stocks, because that's enough diversity, okay? And then never let any one stocks be more than 5% of the portfolio. Never let a sector like technology become more than 20%. And constantly keep trimming as one goes through the roof. If they have a Tesla and all of a sudden it's 10 or 20 or 30% of your portfolio, trim it back to 5. You still own Tesla, but you've taken a lot of profit, you've taken a lot of risk off the table, and you've got more capital to put to work in other stocks. So I kind of like portfolios in that 20 to 25 names, and then using those rules: 5% in any one stock, never more, and never more than 20% in any one sector. And then you get diversification. That's what I'd say. That's if you're going to pick stocks yourself. I much prefer to just pick exchange-traded funds, ETFs. That's what I actually use, ETFs.
What do you think of Bitcoin, crypto, and the future of Bitcoin? Is it going to crash, or is it going to take over our currency?
No, I think it's going to become a property, much like real estate or gold is. I'm not sure it's stable enough to be a currency. It's too volatile. For example, people won't take large payments in it most of the time because they don't know if it's going to be down 30% in the morning. But that may also resolve itself over time. Right now, the biggest issue around Bitcoin for institutions, because less than 5% of the institutions that could own it, is basically the regulator, which in most countries like Canada and Switzerland and France, New Zealand, in Europe and in England, are starting to relax the rules around crypto because they know it's here to stay, or we speculate that. Canada has ETFs now with Bitcoin in it. And I think the US regulator will slowly move in that direction. But also this idea of sustainability. Most institutional investors have sustainability committees, ESG committees, compliant committees around, things like human rights and all that. And I agree with that. And so you have to be compliant. And so, coin mined in China, which is where the majority of Bitcoin is mined, is not made on a compliant basis. And so, that's an issue. And I think it's going to become more and more of an issue. So you're going to see virgin coin become more valuable, because you can't tell the provenance of a coin. You don't know where it's been. You know when it was born, but you don't know if it was part of a nefarious, illegal scheme, or whether it came from China or not. But that's why if you have the provenance and you know it's virgin, then it's more valuable. And I think that's going to occur. There's going to be two markets for Bitcoin. That's something to think about. So I've restructured my strategy. I'm investing in miners now themselves, and then asking them to pay me in virgin coin. So if you're a miner and you want to expand your operations, come to me, I'll fund it, and then you'll pay me a royalty in virgin Bitcoin. And that's the kind of arrangement I'm building right now.